Hi, and welcome. You're listening to the X22 Report. My name is Dave, and this is episode 1584A, and today's date is June 5th, 2018, and the title of the episode is Central Banker Warns of Evaporating Dollar Funding, Global Turmoil Could Follow. Let's get into the economic collapse financial news. Now, we know the people of the UK, they had a referendum, and they voted themselves to basically exit the EU. And we know that the central banks, well, they're not going to let this happen. And while the referendum was going on, they talked about, well, if this passes, the entire economic system would implode. And of course, the referendum passed and nothing really happened. Now they're at it once again because, again, the UK is trying to exit. And these articles that are coming out is saying how if there is a doomsday Brexit plan or the UK should leave the EU, things are going to implode dramatically. And this is coming out of the Times. And this is regarding Britain's doomsday Brexit plan. And it says Britain would be hit with shortages of medicine, fuel, food within a fortnight if the UK tries to leave the European Union without a deal. Now, of course, the central bankers, they want their deal. Now, if they exit without the central bankers' deal, and of course it's always in the favor of the central bankers, there's going to be major problems. This is a threat by the central banking system. And they're saying if this does happen, it's going to be horrific. And what they're saying is day one, Britain most likely will crash and there will be shortages. There'd be riots. There'd be havoc within the country. There'd be cross-channel disruptions for heavy good vehicles. And the whole thing would be a complete mess. Now, this would then spread to the rest of the world. It wouldn't be contained in one country. Now, of course, as we know, the central bankers are very worried about any country leaving their system. They don't want people to leave the system. Yes, they'd be still part of the central banking system, but to bring the European nations together, this would start a trend. And we know that Italy most likely would follow, other countries would follow, and it would hurt their plans. What's basically their plans? Their plans are to have a one world government. This is why they started the EU, to get everyone used to the idea of having a currency that can be used in all of these different countries within the European Union. And then this would spread to other countries and continue on until the whole world is using one currency. This was their plan. Now, if you tie this into the TTIP and the TPP, this was their entire plan to have a one world government structure with one currency, with one central bank handling everything. And what they're worried about is all of this completely falling apart. And they're making threats right now if the UK decides to leave without a deal. And you can see they're becoming very, very desperate. Here in the US, we can see that everything is starting to completely fall apart. We're watching all these different indicators telling us that we're headed for a recession, collapse, depression type of scenario. And while we're moving in this direction, we can see that there's now, instead of having a couple of different classes, there's really two. We have the wealthy and we have the poor. The middle class is almost gone. And the reason for this is because all the manufacturing jobs have been moved away from the United States. The jobs that were high paying are now low paying. We have a lot of service type of jobs here. And if we look at some of the signs, we can see that, yeah, the middle class, it is completely done with. And we talked about this yesterday, about 78 million Americans, they're participating in the gig economy where they have these part-time jobs, where they have jobs where they're not making enough money and they need to do something else to bring in funds to make ends meet. And this is turning out to be a huge problem because a lot of the country is turning towards this, and still it's not enough money. In 2011, the average home price was about 3.5 times the average year's salary in the United States. In 2017, the average home price was 4.7 times the average yearly salary in the United States, which shows you that the salaries have not kept up with housing, with college tuition, with the prices of automobiles, and everything else. Even food is continually rising. That's where the inflation is. In the United States today, 66% of all jobs pay less than $20 an hour. 102 million working-age Americans do not have a job right now. The number is higher than it was at any point during the last recession. But we're in this incredible recovery, and our unemployment rate is at 3.8%, and delinquencies are rising. And housing, well, a lot of people are being kicked out of the market because they're not making enough money, and a lot of people don't have jobs. This is going to be a disaster. Earnings for low-skilled jobs have stayed very flat for the last 40 years. Americans have been spending more money than they make for 28 months in a row. Why is this? If everyone has a job, if we're at almost full employment, well, the jobs, they're not quality jobs anymore. They're part-time jobs. And this is hurting America. It's hurting the everyday working person. In the United States, the average young adult with student loan debt has a negative net worth. The average American household is nearly $140,000 in debt. Poverty rates in the U.S. suburbs have increased by 50% since 1990. Almost 51 million U.S. households can't afford basics like rent and food. According to the Federal Reserve, 4 out of 10 Americans do not have enough money to cover an unexpected $400 expense without borrowing the money or selling something they own. This is a huge problem, and we know that savings rates is at an all-time low, and credit card debt is at an all-time high because people are protecting their savings, whatever they have, and they're using credit right now to pay for their everyday needs because they're very worried if something goes wrong, they're going to need the cash. And we see that this happened prior to 2008, throughout 2008, where the savings rate just completely plummeted, credit card debt skyrocketed, and here we are once again. This whole system, like we've said many, many times before, is not created. It was never created to help the everyday person. It was created to help the central bankers. It was to help them become profitable, to become wealthy, and all those people that are interconnected with the central banks, they become wealthy. This is why the 1% are becoming wealthier and wealthier every single day. They have the insider information. They're connected. They know what's going on. They have the inside track. And this is why they're continually getting wealthier and wealthier and wealthier. And they have a lot of the wealth here in the U.S., and the 1% have a lot of the wealth around the world. And we know that it is almost time before the reserve currency of the world, which is the dollar, it is almost time for it to completely disappear. It's going to evaporate, just like every other currency has done in the past. And we see the Yuan, well, that is making huge leaps in becoming the reserve currency. And I think the Yuan is going to become the reserve currency on a high level. And this is why they've created their system to mimic what the West has. Their exchanges, their gold exchanges, the Petro Yuan. It's already included in the SDR basket of the IMF. They've already prepared for this. They're all ready to make the switch. And China, they are ramping up efforts to promote the yuan as a global currency. After the crackdown on outflows and devaluation in 2015, the renminbi, which is the yuan, is once again gaining momentum. China's Belt and Road Initiative, which is also known as the Silk Road Economic Belt, well, guess what? It's promoting the yuan. China has been increasing the share of yuan with its key trading partners. China and Russia have an investment fund worth over $10 billion denominated in yuan. We know the African countries right now want to work with China only in the yuan. They want to dump the dollar. Iran is saying, hey, let's deal outside of the dollar. We can use the yuan. We can use the ruble. We can use any other currency except for the dollar. India is saying, hey, they will purchase the oil from Iran using the rupee. So look what's happening here. All these countries are moving away from the dollar. And with the Belt and Road, which is the Silk Road, once this goes full on, and it's throughout all the countries, and manufacturing and everything is being delivered by train, by other means of transit, it is game over, because everyone will have to handle and carry the yuan, especially when they're selling oil. When countries are purchasing oil, they're going to use the yuan. And we're getting to the point where the dollar is losing traction, and it will continue to lose traction over time. Actually, a central banker, and this is the Reserve Bank of India, Patel, he wrote and explained that the unintended coincidence has proved to be a double whammy for global markets, especially emerging markets, largely as a consequence of one key event: the evaporation of dollar funding, not only from sovereign debt markets, but in short-term funding markets, as well as the recent spike in the LIBOR spread. This has manifested in a sharp reversal of foreign capital flows out of emerging markets over the past 6 weeks, often exceeding $5 billion a week, resulting in a sharp drop in emerging market bonds, stocks, and currencies. Patel's advice: immediately taper the tapering. The Fed should basically stop what they're doing, because what they're doing is they're unwinding their balance sheet. Now, we know the ECB is also going to be unwinding their balance sheet at the same time. Now, Patel is saying if this is left unchecked, the emerging market turmoil might hurt the U.S. economy, and the Fed needs to watch what they're doing. And if you look at the Fed's balance sheet, their balance sheet has barely declined. They haven't even done much, and it's causing all these problems, especially with LIBOR, those rates moving up, with the interest rates here in the U.S. moving up. This whole thing is a complete and utter disaster. And if you look at the liquidity problem, we saw it back in 2008. We saw it in 2013 going to 2015, and here we are in 2018, and we're seeing the same exact problems. And once again, these warnings are telling us, because we've been looking at all the different indicators, we've been looking at what's been going on, we've been watching the economy, and it's slowly deteriorating. The Fed now is unwinding, interest rates are moving up, the whole thing is going to completely fall apart. Look at New Jersey right now. Look at the pension situation. It is all falling apart very, very quickly. We have the trade wars where Trump and the Patriots are pushing the trade wars. And once again, they already warned us, prepare for pain. I mean, think about it. All this time going back to 2008, the central banks, Obama administration, and the rest has been telling us that we're in this incredible recovery, that everything is great. And most of the people believe this. We've been looking at the economic data, and the economic data doesn't even make sense. A lot of people still don't have jobs, as we've been reporting. The wages haven't gone up. We've been seeing inflation, and the whole thing has been one gigantic illusion, just like in 2008. Everyone thought housing was going to continually move up. Everyone thought everything was great until you come to find out that it was all a lie. They fed us false information. And then all of a sudden, companies started to lay off. Companies were going to fold unless they got billions and billions of dollars. And this started the whole gigantic illusionary game where the Fed was allowed to create as much currency as they wanted to feed the system to keep it alive for them. They didn't care what happened to the everyday person. They didn't care if the people couldn't find jobs. They couldn't care if the people couldn't spend, as long as they can keep the system going, because what they thought was going to happen is they thought they were going to keep their people in place and they thought they were going to have some type of an event where they can blame this whole entire thing, which they've done in the past, where they usually blame this on a war, saying, we're in a war right now, so everyone must sacrifice, the economy is hurting right now, and you'll see shortages. But this would have nothing to do with the war. This would be the economy really breaking down. I mean, if you go back to the 70s, they did the same exact thing. They told us a lie. Well, we don't have enough oil because there's oil shortages. We can't find any oil anywhere. It's all dried up. So everyone's going to have to sacrifice. They were going to try to do the same exact thing. Now they're stuck. Now what do? So again, whoever gets the narrative is going to win. How do you get the narrative? You need to take control of the economy, bring it down, blame it on those individuals that have kept us in this illusionary world, who's lied to us all this time, and show everyone that they have lied. And the only way you can do that is to go into the Fed, go into the central banking system, and do an audit and show what they've really been doing. Investigate, where has this money flowed to? Who's been receiving it? What have they done behind the scenes? And then you find out the truth. One thing is for sure, we are headed for a complete and utter system breakdown. Might not happen tomorrow, might not happen in 2 weeks, but we are definitely headed in that direction, and it will break down just like in 2008. I mean, people back in 2006, 2007 said that it's impossible. The economy can never go into a recession. Everything is strong. Look at real estate. They kept on pointing to real estate. Look at real estate. It's incredible. Look at retail sales. Incredible. You're crazy if you think the economy can break down. The stock market is at 14,000 points. Are you nuts? And guess what happened? All those economists, all those financial pundits, all the trolls, everyone that was out there, completely wrong. Not prepared for what was really happening. This time, the same thing is happening. Because if you look back in history, they're doing the same exact things, except times 100. And when you do the same thing over and over and expect a different result, well, that's the definition of insanity. And the central banks are completely insane. Listen, everyone, thanks a lot for listening. Be well, be safe, and especially be prepared. Thanks a lot.